It's the 10-year anniversary of the failure of Lehman Brothers. What could possibly go wrong next? What's up, everybody? Welcome aboard Bubba's Bottom Line, and it is always great to be here with you on a weekend and discussing what happened last week and what we're looking forward to next week. And of course, it is the 10-year anniversary of the crushing of Lehman Brothers and the manipulation by the Federal Reserve to try to maneuver and get their way out of the problems that were created by the banks and the Federal Reserve. Interestingly enough, they let all these things happen. They continued to let the markets run on air. They continued to go with over-leveraged bad debt and a whole bunch of other stuff. And of course, they allowed JP Morgan to steal Bear Stearns for basically nothing. But what else is new? Of course, we put those out of business that we want out, and we keep those alive that we want. And that's pretty much the standard and what we've seen as we continue to even move forward into the next bubble, the next asset bubble in which we are in right now. But what could possibly go wrong now? You know, I mean, only the fact that we are once again extremely over-leveraged. Once again, we are allowing the banks to do things that are not healthy for the general economy, but knowing that the Federal Reserve will be there to bail them out once again. And of course, nobody cares. Everybody is just thrilled to watch the markets go higher each and every day as we make new highs in this 10-year bull market, the longest in history, but nobody cares. It's an amazing factor. And of course, you tie in the shadow banking, which is basically unregulated banking, and you now have, you know, all of these outside lending sources, which in turn, the banks end up buying most of those loans anyways. So what do we have? A situation, let's see, over-leverage once again. The consumer is over-leveraged, the investors are over-leveraged, and the banks are over-leveraged. But everything is great. We have no problems. There is nothing to worry about here. Move along, son. There's nothing to worry about here. And isn't that what we are told every time before every major collapse? I mean, I personally have traded through, you know, 87. I started in 1980, so I've traded through 3 major events. And I'm sure that it won't be long until I'll be trading through the 4th major event. But of course, as they say all the time, move along, son. There's no problems here. Or when they tell the coach, your job is safe, don't worry about it. We're giving you our vote of confidence. So what we've been watching for the last, you know, I don't know, couple of years is the vote of confidence. And again, there is no reason to believe that the markets will start to break down tomorrow, okay? There's no reason that anybody should exit or liquidate their equity portfolio because of what I'm saying now. But what I'm saying, and the point of all this, is to inform and warn you of what is possible, and not only what is possible, but what is going to happen at some point. And again, this isn't because of this particular administration or this particular Fed. It's always been the same. But even before the Federal Reserve existed, you can go back again. We used the tulip mania as the first major publicized bubble, and there was many before then and many after. So again, all I'm saying to you here is please be aware of what's going on around you. Please be aware, the more confidence that we hear from the higher officials, the more confidence we hear from the Federal Reserve, the more confidence we hear from everybody, the more likely the bubble is going to pop. We have been building bubbles forever, but really heavily since 1980 with the start of Alan Greenspan, the master bubble builder, and we've got obviously his apprentices that have continued to build these bubbles going forward. Now again, this is not a warning of panic. This is not to send the chills down your spine like you better get out tomorrow. There's always going to be time to exit. The key is to let's see when the markets decide that it's time to end this rally. Let's see when the markets decide that it's time to go lower. And then we'll be able to exit. And again, if you're hedged, you don't have to worry about the next great market collapse. But we do believe, and again, this is the important part, is we do believe there is a collapse coming. But we also believe that after that collapse, the markets will go higher and make new highs higher than they are today. So let's not get into it and try to create this major fear, or what the fear mongers like to do, or the false and phony promises you get. All I want to make sure is that you understand exactly what is happening. And of course, what is happening is you've got this chain reaction of the pundits, which love to have the good news. And listen, I like good news too, but they continue to drool about the markets going up each and every day. Most of them have no clue. And the ones that do have a clue are the same ones that were telling you in the year 2000 to continue to buy when the NASDAQ was collapsing. They're the same ones who were telling you to buy when the Dow and the S&P were collapsing in 2008. And of course, all we're trying to do is prepare and warn you and make you understand how the markets themselves work, knowing what we're looking for. You've got consumer confidence at ridiculously high levels. Every number out there is so overinflated and so overconfident that it can only lead to a sell-off. Again, you know, it's the old story. Somebody tells you how great a movie is or how great a restaurant is, and everybody keeps telling you the same thing. It's great, it's great, it's great. And you get there and you go, not very good. It was just okay. And of course, that's what we're getting right now. And you saw it happen, you know, last week when our equities remain in a consolidation level. What we're seeing here is the churning of the market. Now, again, we can break again to the upside, but we were up higher, churning almost to new highs in the S&P. Then the NASDAQ was under a little bit of pressure, but churning higher. The Russell continues to churn higher, and the Dow was higher last week with, you know, some potential good news on trade. And at the end, you know, you've got Trump going to put $200 billion more in tariffs. I think they're going to enact those tomorrow on Monday. So, and again, I'm not concerned about the trade wars, and I think that it has nothing to do with it. But if you look at the way that the markets are acting, the markets are telling you, okay, which is a little bit of a concern, but the markets are telling you that there is nothing to worry about in the trade wars, okay? Now, one thing we can say about the market itself is always right, okay? Because what the market does is absolute. So the market is always right. It never announces itself and tells you that it's going to go up or down, but it is always right in its direction. Now, again, right now, the market is still saying that we should be going higher. In fact, last Monday, a week ago, on my Monday night call, I continued to tell everybody that you cannot be shorting this market yet. As much as I think that we're going to go lower, this is not the time to be shorting. And in fact, if you come back to certain levels, you should look to be a buyer. And of course, we did bounce from those levels. And I'm not patting myself on the back. I'm saying to you very clearly that as much as I want to warn you, I also want you to know that there are times to be involved. And right now, until proven otherwise, even though the money flowing to the market right now is not from the commercial industry, it is not from the big money. This is the end of the retail money coming in. This is the people that have either been out for 10 years and are finally getting back in because now it's safe, because the pundits and the advisors and the brokers say it's safe now because the markets will never go down again. Okay, it's different this time. Nothing matters. Or this is people that are now trying to really press up into the game and using margin and leverage. So with margin debt at record highs and with everybody getting almost 100% invested, who's going to be left to buy? Okay, because the insiders are the sellers. Okay, the insiders are the ones that are liquidating, understanding where we are. So when you look at this big picture, you have to wonder, where can we possibly go from here? And again, I'm not saying we can't go higher for longer, okay? But I certainly wouldn't be pouring in, unless I was hedging myself, a lot of crazy money up here. I would rather see how the markets are going to start to act here as we look at some of the major diverging things that are happening. And number one, you've got the gold S&P ratio, which is ridiculously wide now. I don't believe they've ever been this far apart in separation. The S&P has been going straight up, gold has been going straight down. that is going to reverse. If you think about that as a rubber band, well, the rubber band is stretched probably about as far as it can go. I mean, as a trade, if anybody plays this kind of stuff and plays, pairs trades or plays some of the combination trades, it would be a nice trade possibly to sell this S&P and buy gold. And again, I'm not telling you to make that trade today. I'm saying those are things that I'd be looking at, but those are certainly warning signs that say to me, hey, we're looking for some action and we should possibly see some change in direction. Silver has been totally discarded, and of course the gold-silver ratio is at ridiculous levels, okay? Levels not seen before. So we're seeing a lot of things stretched into oblivion, and again, I say this as nice as I can, nobody cares. Nobody cared in 2008. Everybody knew it couldn't change. Nobody cared in the 90s as they plowed in all of their money, and of course, this is something that we have to just be very aware of, okay? Again, this really goes back to not to create fear or to scare you to say get out of the market, because I never want you to get out of the market. I want you to learn how to stay in the market properly and not have to be afraid of what's going to happen next. I think that's the more important issue, is how do you stay in the market without getting out and without being afraid, knowing that if it does collapse, as we think it will at some point, how do I benefit from that collapse by not losing all my money, and how do I become the buyer when the markets collapse, okay? That's the bigger key. Remember, we've seen many big collapses throughout history, and each one has been met at some point by buyers. Each one has been the buying opportunity of a lifetime. So I don't want to create the fear mess here. I want to create the idea of how can I protect myself today and be able to benefit whenever this big sell-off happens to come. This is Bubba's Bottom Line, Todd Bubba Horwitz. We're going to step out here for a break, and of course, we'll be back obviously with more. But in the meantime, don't forget to check out our high school investing program. highschoolinvesting.com is the website. But if you want to help us out and help us continue to educate the youth of America so they understand all these things that we talk about, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Also, don't forget to catch the Bubba Show each and every day at 4 to 5 Eastern at LibertyTalk.fm. You get great guests, and of course, our friend Adam Barata from Advantage Gold was with us last week, and of course, he's got a great book, Gold is a Better Way. Make sure you check it out. In the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And, as we look back at last week a little bit, and we saw interesting, the hurricane, and certainly our thoughts and prayers go out to all the hurricane victims, obviously your families, a tragedy, okay? But again, a natural tragedy. There's not much we can do about it, and hopefully you were somewhat prepared, but not everybody's always prepared, and things do happen. But you saw the price of oil spike initially to just over 70, and then as soon as the hurricane hit, oil sold off again. We think that that's going to be more of the case. Again, we're looking for oil to hit 64, possibly as early as this week. It will depend a lot on what's going on. This week does have the final part of the Jewish New Year in the middle of it, Yom Kippur, which is on Wednesday. So that will make the market slower Tuesday afternoon and all day Wednesday. It doesn't mean something can't happen, but that is something that will be that will really slow down what's going on. But oil we expect to fall apart. Again, that rally was rough, especially for me. I was short, but it was not totally unexpected. We are now seeing the backwardation formation we've been watching for a while is coming back in a neutral, which is going to be some more negativity for the price of oil. We look, as we hear the experts calling for 95, we're calling for 55. Let's see who's got a better handle on it. Again, I can't see ever going over 75 again. But, obviously that's what makes a market. So we'll see how that plays out. As we mentioned earlier, gold continues in that consolidation range. And again, once again, as I wrote for Kitco on Friday, gold rallied up, and late in the day, well, actually it failed pretty much from morning all the way through the end of the day. I think that gold looks real good around 1190, 1195. if you're looking to get in. I certainly wouldn't be a seller of gold here. I would only be a buyer if I were going to play, okay? But it's still going to be the key whether it can get through the 12.20 level. The dollar continues to hover around 95, which is fine. A little bit below there, we're looking to be buyers. I think the big story last week was the trade wars. As President Trump continues to try to pressure China, and of course China's markets continue to get hammered. And on Friday morning, I sent out a text about 10 minutes before they made an announcement that they were going with some more tariffs, and the markets fell apart. And I'm not taking credit for that, but what I'm saying is that you can see how much on edge the market's on. And I think, but what's more interesting about this whole thing is that no matter what, now we've had, going into then, we've had some fairly good news on trade, yet the grain markets have not been able to get off the bottom. In fact, they continue to hover lower. I now believe that corn and soybeans have made bottoms, okay? I think these are great. These could be the buys of a lifetime in here, I think, in the corn and beans. I think that they've found the bottoms. Again, I don't know how much more bad news I can find out. We had the WASDE report on Wednesday, which indicated that we're going to harvest much more, and I don't think that's actually the case. I think the WASDE is wrong. Of course, I don't like the way they do the report anyways, but I do think that we've priced in once again, and this is like, if you go back and look, we've priced in about as much bad news as you can possibly. I don't know what more they could price in. So to me, those would be outstanding opportunities to step in. And I think when you look at wheat has just been strong all along. You just find levels to buy. The meats, hogs finally broke off that level we were watching, and are up about 20%. And of course, fats and feeders, cattle, they broke out and spiked higher. Don't be surprised if there's some early selling this week, but again, we're looking to buy. We're looking for new highs in fats and feeders, and we're looking for hogs to get up to the mid-60s in there. So, you know, the overall markets were exactly almost as we expected. The cryptocurrencies were under some pressure, but they now have another new bank that's going to allow their clients to trade. So that's obviously something that's pretty sharp. And of course, we've actually made a higher low. So the action itself, even though we sold off a little bit, is fairly bullish. I think what's not bullish, though, is 40% of Americans, okay, struggle to pay one of their major expenses, like either a car payment, food, something like that. So with a booming economy, okay, yet we have 40% of Americans. As I go out and travel and see things, I have never seen more homeless than I see today. Okay, I have never seen more people when I stop at a stop sign trying to get money when they stop. Okay, I think that that's a problem. Now, again, I don't know who to blame. I don't want to blame anybody on that. I don't know how to solve it, because I do know that there are a lot of jobs wrong. Okay, that is something that somebody has said to me, and listen, everywhere I go, I see a help wanted sign. Okay, and I think that obviously we've got more jobs than people to fill them right now. That is due to either people that don't want to work, that like to get that free company payroll check, or from, you know, either the jobs don't pay enough. So I think that's what's going to create some wage inflation, because people are going to, the companies are going to have to step up and pay more to get people to come to work. That's just real. And I'm talking about not just one or two places. I'm talking about everywhere you go. There are people looking, in my area, that are looking for people to work. So I think that that is something that is very, very interesting, and should create some wage inflation, which will most likely help the next, unfortunately, the next financial meltdown. You know, that inflation and tied with interest rates that are rising. Okay, the 10-year hit 3% again on Friday. The dollar's going to take off. The Fed is going to lose control. Again, these are things that we've talked about for months. And again, when they make that perfect storm, or what will be considered an unperfect storm because of what it's going to cause, that is when the market should start melting down. But again, you've got the worries of a tremendous amount of bad debt to tie into there. And, you know, again, we talked about a little earlier, the shadow banking system. The whole deal is just creating one big mess after another. And I think that's the things, of course, that we want to look at. And of course, as we say, you know, the over leverage and all the other problems that go on. And of course, as we talked about last week, Colin Kaepernick and Nike. Well, as I said, that Nike is not dumb. I don't necessarily agree with who they are or what they're doing. I mean, you know, Phil Knight, a major capitalist, all of a sudden, of course, as many of them have become, as they make all their money, they decide that they want to, you know, they'd rather turn to liberal because they've already made their money. But in the meantime, as we thought, you know, their customer is 35 and under. It did not affect them. In fact, it's, from what I understand, the program has been quite successful for them. So that's the point, and that's what we should be worried about. And not worried, that's not the right word. Look, this is what makes America great. You have the freedom to do as you wish, and of course, they're making a hero out of Colin Kaepernick, and I think we're educating our youth in a lot of the wrong things. I think we have too many things about socialism and how to get free stuff versus how to actually go to work and earn your way out and pay your way through. And I think that is an issue. And again, this is kind of the message that we send. You know, I think that, you know, it's really becoming a much bigger problem as we look at the different things that are happening. And you can look at, you know, the Cortez election and some of the others, and you're seeing more of the youth want to believe in more of a socialism view. Now, you know, the United States of America does have quite a bit of socialism built into what we do. You know, all the welfare, all the food stamps, all those things are more of a welfare socialist type of program. So I think that I don't think that we'd want any more of this. I think that would create a much bigger problem. Okay, do we want to end up as the Eurozone is right now, with their banks starting to collapse once again? Again, these are problems that everybody wants to deal with in just print more money. That is the problem. Okay, Yellen wants the Fed to continue to keep these rates at ridiculous levels. Okay, you cannot continue, otherwise you end up in nothing but a big mess. What we have today, what we have is a failure to communicate. I know. What we have today is we have a market that is built on error. It is built on the free money from the Federal Reserve. Okay, it is built to only help the upper 1%. Okay, the general population does not benefit from these policies. The general population does not benefit from any of what's going on right now. Okay, so we can hear them talk about how great it is, but again, we have not seen the growth of wages. We have not seen the growth of good jobs. So there's a lot of things going on that are just a bunch of hooey, I guess we'll call it, but things that, you know, need to be addressed. And again, I don't want anybody to give anything for nothing, but I want people to have the opportunity to find that good job. I want to see these big companies that have glommed on to all this money that they have gotten through this low interest rate environment, through the bailouts, through all of these things. And I'd like to see them finally step up and pay better wages. I don't want government intervention to make them raise the rates, but I think it's time. So hopefully the supply and demand model, the price discovery model, will help wages go higher so that we can start to employ more people, and people can actually start to buy things, not to create more debt, but actually buy things that they can actually pay for. I think that's a much bigger and a much better solution, is to have people earn their money and quit with the joyous how great everything is, when yes, things are better, but the jobs, we need to continue to see a supply demand model to push up wages through the natural thing, which would create some more inflation, and that might also cause a little bit of an issue, but I think wage inflation is never as bad as regular inflation. In the meantime, this is Bubba's Bottom Line, Todd Bubba Ward. We're going to step out here for a break and come back with my commentary right here on Bubba's Bottom Line. Hey everybody, listen, if you'd like to help us out with our high school program, we're always looking for help. It's hard to keep financing this thing. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Also, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. This is Todd Bubba Horwitz, and my commentary today is about the fear mongers out there. You know, as you may or may not know, I read and get a ton of these advertisements, which I'm sure many of you do, if not all of you. And everybody is promising me the world by the fear that they are creating within the general markets. And as you know, I've talked about this many, many times, that you don't want to sell the market too soon. You should figure out a way to hedge yourself so you can stay in the markets. You should never be panicked. But yet each and every day I get an email that the world is coming to an end for this known reason. And it's not one, it's all of these big marketing firms that are trying to blitz you, and what they're really doing is they're trying to play on your fear. Okay, they're trying to scare you into so that they can get your cash and not have you keep it. And I can't really take the fear mongers. You know, you take a guy like David Stockman, who's been on Fox a number of times. He worked for Reagan, continues to tell you that the world is coming to an end. And of course, and it may very well at some point, but it hasn't yet. This is where you have to take yourself and teach yourself and understand how the market functions and what to do in times of turmoil and trouble. You had Krugman, who said in 2016 that if Trump won the election, the market would collapse and they'd never go up ever again and get there. And of course, here we are. And again, there's author after author, there's pundit after pundit. Everybody, the world is ending. There's no way. Now again, I'm in agreement that there's going to be a sell-off, but I don't ever want you to be able to be feared, and it certainly don't want you to be feared into handing your money over to somebody else. And that's always the concern that I have from the industry is that people get twisted with this fear because they think everything is going to end and they're going to take all their money away. And this is where you have to say and take the time to understand, again, how the markets work, how your money works, the whole key. This is where you have to really take yourself aside and say, I'm going to look at something that somebody says, and there's nothing wrong with reading it and understanding it, but make sure before you invest in anything that you understand what it is you are investing in. Because remember, at the end of the day, everybody's out to get our money, and nobody cares as much about our money as we do. So please, as the things start to happen and as you get more of these fear-driven emails that the world is coming to an end and chicken little and the whole deal, I urge you to take a deep breath, read it, and before you do anything, you understand it. Because as I'm telling you, as we all know, there's a lot of scammers out there that are looking to get into our pants pocket, into our purses, and into our bank accounts. So I warn you to say, hey, take a deep breath, read what you want, understand it, and if you understand what they're trying to create the fear on and you believe in it based on what you understand, then hey, it's obviously we're all independent people, we can do our thing, but don't be sucked in to this ridiculous emails and advertising that is only designed to really get into your pants pocket. This is Bubba's Bottom Line, Todd Bubba Horwitz. Of course, it is a football Sunday, and of course, we're going to give you one selection today. We are going to tell you that we like the Dallas Cowboys tonight. Go get them, Cowboys. Everybody have a great weekend. Have a great day. We'll see you back here tomorrow with Bubba's Daily Update. Thanks, everybody. Have a great day. Bubba's Bottom Line. We'll see you next time.